Markets saw a broad-based rally yesterday afternoon. The Nasdaq closing 4% higher, boosted by shares of Alphabet and Microsoft. Joining us right now to break down the surge, Jared Weisfeld. He's U.S. technology sector specialist at Jefferies. Good morning to you, Jared. We've had this sort of surge in the markets, but also in our earnings that have been really quite mixed. So how do you make sense of it?
Yeah, for sure. Listen, I think a lot comes down to what's been priced into shares. I think Microsoft and Google were great examples, right? On the surface of it, not incredible results, but significantly better than feared. If you were to tell me that, we're in the middle of a recession and Google is growing 13% year on year, Microsoft endorsing double-digit revenue growth for the forward fiscal year, despite all of the headwinds that we're talking about, despite the headwinds of the US dollar, generally speaking, these have been pretty okay from the generals of large cap tech. So certainly think, pretty significant positive results from 2 nights ago. Obviously, Meta more mixed last night, but in general, I think a lot comes down to what's been baked already into these stocks.
So part of this is a multiple story. What do you think is a fair multiple to put on these stocks, given where the larger market / macro economy is?
No, that's exactly right, Andrew. It's a tale of two cities for calendar 2022, right? The first half of the year was all about multiple compression, and now the second half of the year is how negative are these earning revisions going to be? So, Google's a great example where, you look at, dominant market share with respect to search, a really good proxy for the broader economy, and it's trading at 10 times EBITDA and a sub-market multiple, right? That's certainly too cheap, and we saw a relief rally yesterday. I'm not going to opine on what that right multiple is. I think there's a lot of factors to think about. I think the interest rate movements are significant, and the fact that we're inverted from a yield curve perspective and seeing the 10-year come in at 2.8% or so, I think is really helpful for tech when you've got that current yield curve inversion, which I think is certainly supportive of a continued market rally, especially for software stocks.
How do you think about what we heard from Mark Zuckerberg last night when it comes to digital advertising and his concerns versus what you're hearing from Alphabet? And they're concerned. I don't want to suggest they're not concerned, but it really did feel like two different sort of economic situations taking place. And I don't know if you think what's happening at Meta is sort of idiosyncratic or is directly about what's happening at Meta unto itself.
For sure. There are very company-specific headwinds that are occurring at Meta, right? To put things in perspective, Alphabet just grew revenues by 13% year on year. Meta just registered its first ever revenue decline at negative 1% year on year. They're both impacted by foreign exchange, right? So that's not going to be idiosyncratic to Meta. But what Meta is facing is really significant competition, especially from TikTok. They're facing monetization issues on Reels, and they're facing issues with respect to changes that Apple has instituted from a platform privacy change perspective. None of that is really being impacted from a Google standpoint. Maybe on the margin a little bit on TikTok. YouTube only grew 5% year on year, but a lot of company-specific headwinds that Meta is facing.
So we were talking about this earlier, Becky and I, about this issue about small businesses, about how much you look at Meta and you say, is this representative of a sort of larger economic headwind, or do you say not really?
Yeah, I'm more in the latter camp. I mean, to your earlier point, Andrew, I mean, let's not make things that are incredible right now. I mean, Google certainly alluded to push-outs and talked about advertising pulling on the platform, right? So everyone's impacted, but I certainly think that, Meta's not going to be a great proxy for the current state of the economy for all of those reasons. And you saw Meta's pricing was down 14% year on year in the quarter. They're really getting impacted from a monetization standpoint.